Hi, welcome to the Market Alert for Wednesday, the 14th of February 2024. So CPI prints hotter than expected in January as supercore soared. Never heard of supercore before. I've heard of the core CPI, but not supercore. Prices are now up over 18% since Biden was elected. So if that's the case, why is it only coming out at 3.3 for this particular number? Again, the massaging of these numbers is never ceases to amaze me, which is why they're known as the CPI. I know Biden's been in for 3 years, but even so, inflation has allegedly dropped if you look at the graph. So it seems slightly odd that they're actually reporting an 18% increase here. We know it's more than 18% anyway, and this ties in with John Williams' Shadow Stats website, where he reports inflation numbers back from the 1980s using the same criteria. But very, very strange that should be mentioned. Stocks and bonds slide as hot CPI unwinds. And like I say, just going back to this, I'm struggling here, if anybody can help me. But the previous was 0.3, it came out at 0.4, 0.3, 0.3, and 3.4, 3.1. The forecast figures, it's only up 0.1 or 0.2 for the final one down here, but that's not massive by any means. But the market's reaction to it certainly was. So let's kick off and have a look at the markets and start off with the Dow. So in the Dow, we see the market move sharply to the downside, and like I say, I'm struggling here to understand why they did this. However, the only thing that I will say, if you go to a weekly chart and to a monthly chart, we'll start off with the weekly, you have a bull market, and the way to get rid of a lot of people and offload some stocks is to use a day like yesterday to shake out the week longs, get rid of the stops. You can see where the stop losses would have been, and they were all taken out yesterday, and also that creates further panic and the market moves lower. But on the pretext, of course, that we had one news item. I mean, it's an important one. It's probably the main one now, next to the non-farm payroll numbers. And then the market just continued throughout the session. We had a bit of a bounce for 30 minutes, but then it resumed to the downside. Overnight, the markets bounced, and now they've probably taken out those stops. They're more likely to bring the markets back up and continue the bull market that we're currently in, that started back in October. So it wouldn't surprise me in the slightest. I know that shakeouts are required and profit taking along the way. But again, when you look at the long term in the monthly chart as well, going back to the October of 2022, the Liz Truss fiasco, you can see how the market has continued to move to the upside with the odd minor correction there and shakeout as well. So for me, I can't see any other reason. I mean, the fact that they're not going to cut rates in the near term, well, the market was already factoring that in anyway. So to see this moving back up overnight already is of no surprise whatsoever. In the German DAX, similar picture. Market shakes out to the support to the left. Market up on the overnight. And if we have a look, you can see there we were already moving down anyway. We were sideways. Then the news came out, and then it was sideways again, and then drifted lower on the electronic session before prices have found stability. Again, you can see strongly moving up already as the market heads back up to yesterday's high. Now this is out of the way. No news of the war. Everything seems to be fine with the economy. We know it's all not. Obviously, this is all tongue-in-cheek. The usual stuff that's trotted out by the media, so don't be surprised if the markets just continue back to where they came from yesterday. Meanwhile, in the S&P, again, an uptrend, shakeout, get rid of the week longs, move the market back to the upside on the pretext of what is poor news. In my opinion, it's not that bad compared to what I've seen in the past. So the abreaction of the markets is very, very strange. Like I say, the only thing I can come up with is the fact that Tom Williams, who I knew back in 1995, 94, he was a market maker, and he said that they use these opportunities to shake out the week longs, and that's no doubt what they've done there. Market sideways overnight, starting to move back to the upside. Same theme all the way across the board, including the FT100, which was also subject to some selling yesterday. You can see they're trading down to 78% retracement. I'll remove those because what the market's interested in is more on the upside. 30-minute charts, again, you see the market moving lower with the news and then continuing. Overnight, the market back above the close, just the DP and the 50 EMA, which is the same picture across the board for all of these major indices to get through and then continue to move higher. News for today. Let's have a quick look. We've got CPI for the UK this morning. Now, this is actually forecast to be higher, so it'll be interesting. If this comes out lower than the previous 4%, then the markets will use that and they will run with it. We've got core CPI as well. That's forecast to also be 0.1 higher. We've got PPI as well. Again, those numbers will be used as well if they come out better. RPI is the one I like. That's also shown to move higher as well. They don't use that one on the TV anymore. They've got the house price index as well. That's forecast to be minus 1.8. Previous was minus 2.1. And then Bank of England governor is speaking at 3 p.m. So it'll be interesting to see what he has to say and how the markets react as well. 3 p.m., half an hour after the Dow has opened. Let's have a look at the dollar. This is obviously yesterday, as I said in the alert, it would rally strongly if the CPI numbers came out higher than forecast. They did. So let's have a look at the impact on the metals market, including the gold-silver ratio. And silver, well, what a surprise. Slammed to the downside, $21.86. It stayed at $22 for a while, but we're going through this today. Is my guess. We're going to continue down to $20 is where the floor is for this market. I've said it for months now. I'm going to stick to it until it gets down to that level. There you can see $22, the market trying to bounce off this at the moment, but struggling a bit. We've been below it. It's already a taste of it, so there's nothing to stop it from moving low, particularly if the UK CPI numbers come out higher than forecast as well. Meanwhile, in the gold market, again, slammed $35 plus. Down to between the 78 and 89% retracement, and again you can see the decline there. That's the big drop to start with. Utter nonsense. This is incredible. In fact, if you want to see that, or confirmation that the markets are manipulated, there is a wonderful video by Monaco64 which I will post a link to in the notes, because again, it's nice to see somebody from Morgan Stanley coming out and saying that he had his eyes opened, didn't want to believe it, but then had to concede that the markets are in fact rigged. Well, if you followed me for the last, I don't know, conspiracy theory years of 20 years, you will know that's exactly what I've been saying. And again, that would give credit to Tom Williams, who was trading in the 1950s, and he was the one who introduced me to how they used to do it all in those times when it was all done via paper, and how they could actually rig prices. Now, of course, it's a piece of cake. You just write a computer algorithm and the algos get on with it. So that's the gold. Let's have a look at the gold-silver ratio. Well, as you would expect, we're heading back to 92. No surprise whatsoever. And this time we should be able to get through this, as the speak of no rate cuts will dominate the news headlines going forward, and that will put pressure on the silver and the gold price, and that'll allow them, and when I say them, the central banks, to continue to accumulate gold at record levels that they're doing at the moment. So there's something coming down the line. When it is, I don't know, but they wouldn't be accumulating gold at these sort of levels, and they've been doing so since 2010, when prior to that, as you've seen before in the market alert when I've shown the graphs, that they were selling, particularly Gordon Brown, who sold off half of the UK's gold reserves for $289, where gold is now $2,000. Yes, and he was a chancellor, and he knew what he was doing. Well, he did know what he was doing, and he did it for other reasons, but not to go into in the alert here. There's plenty about that. Right, let's have a look at yesterday's trades, see how the market fared. We can see that already, and then we'll have a quick look at how the market's recovering overnight. So yesterday the market moving, as we can see from the Pre-market traded sideways. That was on the UK news, and then we opened up and the market decided to move down. It's a shame here because we had a sell signal. It just wasn't filled quick enough within the 3 bars because the market then made its way down to the lows. But as I've said before, you could see the bars are red. We're below the 3 averages there as well. The market then finds some support, tries to come back above the low, which we see here, prices moving up. Eventually they do. We get back above the low, and then we go into the waiting mode for the CPI numbers, and then they are released. And like I say, for the life of me, I can't understand why we had such a big reaction. And normally you'd get a rally back in this sort of thing, but obviously there was another agenda for yesterday to keep the markets moving to the downside, and which is exactly what happened there. We traded down to the S3. The S3 is an area where the market will find support and stop at least 90+% of the time. We see exactly that during yesterday. The market moving up, but only to the 50 EMA before it reverses, and then back down to the S3. Just below it, market starts to trade sideways. You can see how quiet it is. The Dow starts to move back a bit, and so does the DAX, again with another scalp trade. And then we get into the end of the session where the market then put a few more points back on, but it took until late into the evening. So overnight, the market coming off the close, you can see in more detail here in the 2-minute charts. And let's squish the chart up a bit so we can see what we've got ahead of us from 7 a.m. That's going to be a deciding factor. But if it's less than forecast, then we will go straight through the DP and then up towards the R1. We have got the high of yesterday above this as well. If the figures are used in the same way as the US used the CPI numbers yesterday, then watch the close. And the downside, obviously, the low isn't too far away at all. Let me just reset this, bring it back a bit. So you can see at the moment we've got the averages all in the right alignment, but it will only take one news item to send this market back to the downside. Okay, that's it for this one. I'm going to end here because I want to get it out before the 7 a.m. release of the UK CPI numbers. So with that, have a great day. And as ever, thanks for watching. See you in the next one.